Rough day in the market today. Donald Trump and President Musk are throwing hand grenades, and the entire market's down a lot today. Probably shouldn't worry. I'm not. There's always a bull market somewhere. What are we going to look at? I mentioned Coupang in a prior video, and earnings came out, and I mentioned Coupang in another video. And Coupang has a weird thing that it does where every quarter earnings come out, does really well, and then the stock goes down. This time was no exception. Earnings came out, knocked it out of the park, and it's down. So normally what I would do is buy more here, but I have a lot of this already. And I have a friend who trades option on these. When it comes out, he'll sell some puts, so he'll buy it cheaper if he gets exercised, and then he'll buy some calls. But options are a lot more riskier than buying the common. So I have a lot of shares of Coupang. It's about a 4% position for me. It's a great company, and I'm not going to go into it completely. You can check out the prior video about why I like about it. But if we look at the quarterly earnings call, if we look at the quarterly earnings, you'll see that net revenues up 8%, 21% year over year, and 28% on an FX neutral basis. So what does that mean? This is a company with operations in South Korea and Taiwan, and that actually fluctuates against the dollar because of the attempted coup in South Korea. The Korean won went down a lot, so if they had used the same currency that we did, this would be up 28% year over year. But even with the decline in their currency, it's still up 21% year over year. And 21% year over year, that's huge for a company like this. Some other highlights. Some other highlights, the developing offerings segment, which was small but fast growing, is growing very quickly. So 3.6 billion now, and it's up 363% year over year. So the developing offerings segment went from negative 63 million to positive 466 million in 1 year. Another important thing is margin. This company has a lot of operating margin. One of the reasons people who were negative on the stock criticized it is because it had low profit margins, like 0.5%, 1%, but it went from losing money to steadily going up and up and up. So 1%, 2%, 3%. Now it's got a 7.5% margin, and they're targeting 10% margin. If we look at the PowerPoint that was released, here's a great, very little dilution. So if you have a stock that's growing fast and not diluting, that's a great combination. So 1.4% dilution year over year. So they're not issuing crazy stock options like Google and Meta in the early days. They are not diluting you. So what the company is doing that is benefiting them benefits you. And the owner owns a lot of the company's stock. So he's getting rich by owning the stock, not by issuing himself free shares like Elon Musk. And if we compare Coupang to a company with hot garbage like Tesla, let's look at Tesla's dilution. So it went from less than 2 billion to 3.5 billion here, and Elon Musk wanted to issue himself an additional 50 billion in pay. The Delaware court shut it down, so he moved the company's headquarters to Texas, and now he's trying to get himself paid an additional 50 billion. So it went from here to here, and then if he gets his wish, probably get diluted even more. And that's not a great thing, especially if you have a guy who's hooked on ketamine, running around stage with a chainsaw, and running several companies part-time. But I digress. Let's get back to Coupang. So very little dilution. That's wonderful. This is something I like. I call it the ratchet. They call it the cohort. So every year you use more and more internet. You don't have a year where you use it less than the prior year. And same thing with certain companies like Amazon. When you first get Amazon, you might buy $100 worth, and then by year 10 you're buying $200 or $300 worth. And that is what they've seen at Coupang. So the people who got the product, the service, year 1, they use it more every year. So year 2, they're using it more. Year 3, going for people who got it 5 years ago, same pattern. 3 years ago, 4 years ago, they call it cohorts. So that's great because the new cohorts are spending faster, but also the amount that they spend to acquire customers. If you pay $1,000 to acquire a customer and they buy $200 in year 1, $400 in year 2, and $800 in year 3, by year 3 you're making a lot of money on them. But if you're spending a lot to acquire customers, that sort of gets hidden in the profit and people don't recognize that. So that's why I like this cohort thing, because even though you're paying money to acquire customers, as you get them, those are going to pay off over time. So again, everything going up. So here's something interesting, gross profit versus net income. So as you can see, gross profit keeps going up from 6.2 billion to 8.8 billion in 1 year, but you'll see that net income for shareholders went down. So what happened there? Well, you have Farfetch, which they bought, and it's still not profitable yet. They're trying to turn it around, and this is some insurance thing from a fire. I won't get into that. But KFTC administrative fine. So the way that the US FTC used to go after people, and the way that European regulators periodically like to hit Google and Meta, the Korean FTC fined them for their practices, which are very common here on Amazon and other companies, that if you do a search for something on Amazon, you will see their products listed above the people who use Amazon fulfillment, and they are appealing this fine, but that's a fine that they got hit on, and it's temporary. Even though sales and profits are up, free cash flow is down a little. What's going on there? They are investing more into their network and logistics so that they can improve the customer experience, and that makes their moat even wider. So the penetration of Coupang in Korea, it's about 20% of the retail market in South Korea. And in the US, Amazon has about 35% of the retail market online. And by investing in the fulfillment and logistics, Coupang has the possibility of doing at least that in Korea, because they do what Amazon does better than Amazon. So Amazon has 2-day deliveries, and nowadays when I order 2-day deliveries, sometimes it's 3 or 4 days. But with Coupang, if you are in Seoul, which is the capital of Korea, and you order something by midnight, it will be on your door by 7 a.m. So it's an amazing company, and the more that they invest into a customer experience, the better it is for the customer and for the shareholder. So again, one of the prior criticisms was that the margin was too low, but margin is going up, so profits are going up. And if you make a 10% margin on $1 billion, and then you make 11% margin on $1 billion, that the same billion, but you make more money on that. This is the developing offering segment. So they have Amazon-like services such as Prime. They have a service like Amazon Prime in addition to their delivery, and they also have movies and streaming and other specialty things like Uber Eats, the equivalent that they have. I think it's called Rocket. But they're not afraid to try new things, and those new stuff fall under developing offerings. And it has been growing steadily all the time, and year over year, 352%. So last year it was only 800 million in profit, but this year it's 3.6 billion. So the more offerings that they have on the equivalent of Prime, the more customers will use their product, and the more they'll use it for everything. So it helps to increase their moat. So again, as I said, everything looked good on the earnings call, but as it has during prior quarters, it does great, and then the stock goes down, which to me I think is a good buying opportunity. The PE looks kind of high, but if you think of it on a forward earnings basis, still looks kind of high, but I'm not selling. Over time, I think it'll do fine. Korea still keeps growing, and they are expanding into Taiwan, and Taiwan is growing faster than the Korean operations were at the same point in history. So they are spending more to make their logistics better, and more warehouses, better delivery, more offerings. So I think all that is going to sort of wrap itself up in this virtuous circle. And I'm still holding. So as I said, if you're looking at a company, you should be looking at the performance of the company, not the stock price. So if this keeps going down, but the performance of the company keeps going up, that's a great combination. And what you don't want is what's going on with Tesla, where the price had been going up like this, and the stock price and the performance of the company is going down like that. So you want the opposite of that. And the opposite of that, in my opinion, is Coupang. Not an opinion, not a recommendation to buy or sell. This is just what I see in this company and what I like about it. And do your own research. It's your money, not my money. And if you have a comment on this, if you think I'm off about something, leave a comment there. If you have something to suggest, leave a comment. And there's a link to a Buy Me a Coffee if you want to support the channel. And we'll see you on the next one.